Fed hawk. Christopher Waller just floated a rate hike, and the entire AI trade is bracing for this morning's CPI print. Plus, 4 more stories moving the tape. Let's get into it. The AI-led rally faces its first real macro test of the quarter this morning. June CPI drops at 8:30 Eastern, and Q earnings from JPMorgan, Goldman Sachs, Wells Fargo, and Citigroup all land before the bell, with the S&P 500 sitting near a record high. The tape turned tense Monday when Fed Governor Christopher Waller warned the Fed may need to raise rates in the near term, flipping the narrative from cuts to a possible hike and lifting July 29 hike odds to 43% from 30 a day earlier. For chip and AI names trading at rich multiples, that hawkish pivot is the single biggest downside risk on the board. The bear case, a soft headline print. Consensus sees minus 0.1% monthly on cheaper gas, could mask core inflation stuck near 2.9%, keeping higher for longer pressure on the priciest stocks. The signal, options imply a 0.7% S&P swing today. Sticky core, and the richest AI multiples reprice first. Anthropic just cemented its status as the AI revenue leader, a reported $47 billion annualized run rate, and said to be profitable in 2026. Now it's added another marquee name. Monzo and Go cardless co-founder Tom Blomfield is taking leave from Y Combinator to join Anthropic's compute team under Tom Brown. That caps a stunning talent raid. Karpathy from OpenAI, Nobel laureate John Jumper from DeepMind, Eric Boyd from Azure. And it lands as Anthropic has confidentially filed its S-1, with a public listing expected as early as October. If it prices, this is the highest-profile pure-play frontier AI IPO yet, and a direct read-through for how OpenAI and xAI eventually get valued. The bear case. That $47 billion run rate rides on locked-in compute commitments, and any margin wobble gets punished hard in a debut priced for perfection. The signal. Watch the S1 revenue disclosures. If gross margins clear enterprise software norms, the entire private AI cohort re-rates higher. A Blackstone-led consortium, alongside Apollo and KKR, is investing $5.34 billion for a 49% stake in 5 behind-the-meter power projects owned by pipeline operator Williams. Behind the meter means dedicated generation that sits right next to data centers and bypasses the congested grid entirely. It's one of the clearest signals yet that the AI bottleneck has moved from chips to electrons. And that private capital now sees data center power as the next multi-decade infrastructure trade. Roughly $4.4 billion funds future build-out. About $900 million is upfront to Williams. The bear case. These are multi-year construction bets, and if the AI capex cycle cools before the megawatts come online, private equity is left holding stranded gas assets. The signal. Watch independent power producers and neocloud operators. The ones that lock in dedicated megawatts win, and this deal just set the benchmark price for doing it. Google DeepMind is reportedly targeting July 17th to ship Gemini 3.5 Pro, having scrapped the 2.5 architecture for a ground-up rebuild, with a reported 2 million token context window and a new DeepThink reasoning layer. One critical caveat: Google has not confirmed the date, the specs, or pricing. July 17th is a widely reported target, not a signed launch. It would arrive just 1 week before DeepSeek V4 graduates from preview to stable on July 24th, setting up a dense mid-July frontier model showdown. The bear case. The specs are rumor tier, and Google has a history of demo-to-reality gaps. An underwhelming launch dents the Google Cloud AI narrative just as it's regaining momentum. The signal. If Gemini 3.5 lands with credible reasoning gains on July 17th, expect immediate pricing pressure on OpenAI and Anthropic, the same Anthropic racing toward its October IPO. Miss the date, and the rumor unwinds fast. Samsung is pulling its chip fab timelines forward by as much as 2 years, part of a national push in which South Korea is steering more than $1 trillion into fabs and AI data center clusters over the next decade. Samsung and SK Hynix alone are committing north of $1 trillion jointly. The pull forward is a bet that HBM and advanced node demand stays structurally tight, the same power and silicon scarcity driving that Blackstone-Williams Electron deal. It doubles as Samsung's pitch to win foundry share, including reported 2-nanometer talks to build custom chips for Anthropic. The bear case, accelerating multi-billion-dollar fabs into a demand forecast, is exactly how memory cycles overshoot. If HBM softens in 2027, Samsung eats the overbuild. The signal: watch whether the Anthropic 2nm talks convert. A frontier lab anchoring Samsung's foundry would validate the pull forward and pressure TSMC's lead in custom silicon. The through line today: the AI trade is priced for perfection, from Anthropic's IPO to Samsung's fabs to Blackstone's electrons. And this morning's CPI print is the first real test of whether those multiples hold. We'll be watching every number. Subscribe to the Daily Alpha, and we'll see you tomorrow.